Hi everybody and welcome back to Mindfully Trading, where I share educational videos about trading the Forex market, as well as an insight into my journey as a trader. And in this video today, I'm going to be sharing with you a review of a losing trade. So this is a trade that I took this week. So as I'm recording this today, it's Friday the 23rd of June. And this was a loser that I took day trading the pound against the dollar. Now, I find that it's really good to evaluate a losing trade because there are so many factors involved as to why you have lost. And then there is always the potentiality that it just wasn't your day and the trade didn't work out. So that's what I'm going to do in this video. I'm going to go through my process on how I evaluate a losing trade, how I learn from a losing trade. Hopefully you'll be able to get some tips from this video and maybe pick some things up as well. But as always, if you enjoyed the video, be sure to hit the like button because it really helps me out, and make sure you subscribe to the channel, and let's get straight into it. So this trade was taken, as I said, on the pound against the dollar, and it was taken on Thursday, the 22nd of June. So to go through this process of how I took this loser, I'm going to use this backtesting tool in TradingView, which will remove the current candlesticks and go back in time. It's really useful for this kind of practice, for evaluating and sort of unleash candlesticks as you go along to test a strategy. And what exactly am I looking at here? Well, if I zoom out, even though we're on the 5-minute time frame, you can see these vertical dotted lines. They are session dividers. So that shows the price action that happened during each day. So we've got the Monday, Tuesday, Wednesday, and then Thursday, the day that I took my losing trade. So as you can see, we've been in this really nice uptrend, making higher highs and higher lows, and we've come up to this level. Now I've drawn this yellow box here. This signifies a fair value gap on the daily time frame. So I thought we may get a little bit of resistance here, and it could be acting as that because we've started to have this pullback now. Price this week so far has been pulling back and selling off. Now, if you just try and ignore these vertical lines, the grey vertical lines are simply institutional price levels. So they are levels, key levels where I believe price may react and it may produce a trading opportunity. So that's what that is on the charts. Now, the thing I'm most interested out, as you can probably see, are these two boxes that have captured price. And these are simply using the Fibonacci retracement from key pullback levels. So there was one here. If I go from the low to the high, you can see that the 3 lines on the fib match up with this box, and that's what could be capturing price here, where we're getting a reaction. I thought that might be a good place for price to pull back to and maybe get some kind of support, a little consolidation and support before it retakes that uptrend, but time will tell. That was just an overview of what I was looking at for this current week, but zooming in on the Thursday session now, all I look really for that is the previous day's high, which is this level here. And the previous day's low, which is all the way down here. Now you can see that Thursday opened, and for the moment we have basically just been consolidating down. We're in the middle of the previous day's range, but we did get this bounce at this level here, and I felt like there was a good chance that price would dip down as it is doing, and then maybe provide an opportunity for a long, which was my overall bias from the daily time frame. But where would be a good place to get in? Well, you can see I got this box draw here, and that again was using Fibonacci retracement levels. So if I look at market structure here, from this little consolidation we had coming back down here into the structure, we got a strong push up. We broke previous structure 2 points here, and we pulled back, and we then pushed up, breaking this little pullback. So you can see that price is starting to shift, a change in behavior from pulling back down to moving back up. Now, going from the very low of that, I basically looked at the high here and the low, and then we broke that high. We made a new higher high and a new higher low, and then we pushed all the way up. Now I used the most recent low using the bodies of the candles, and I dropped it right at the top of that high, and that's what made this little box here. This basically allow me to remove the fib, but it marks these three levels on the Fibonacci, which is the 62% level, the 70% level, and the 79% level. They are the key levels, optimum trade entry, where price is likely to react and it may provide a potential trading opportunity. And as you can see, at 8 o'clock, start of the London session, we started to get a reaction at this level. So at this point, I basically was on the charts, having a look in the morning. Now, although I don't actively trade until the New York session, which is 1:30 GMT, in the morning it's a good opportunity for me to be able to look at the charts without actually aiming to get in, so that I am emotionally not reacting. I am simply just analysing and making a plan for the day, and that was what I did. Now, I actually did a screenshot of the plan that I did of the day, so I'll just zoom in here, and you can see it's the same chart image. I've got the same levels, the daily low, the daily high, and the same OTE, optimum trade entry fib levels. And these were the two plans that I made in the morning. So I felt like at this point in time, when I did this in real time, the market was up here, I felt like there's a chance it could come back down to the top of this fib level. And if it made this kind of pattern, I'd be interested in getting in long, riding up to the previous daily high. Alternatively, if from this point by the New York session, price rallied up and broke the previous day high, I felt like there was a good chance that if it made this pattern here, where it broke the high with momentum, it kind of pulled back a little bit, that would provide a nice opportunity to get long up here to ride and move further higher. So they were my two trade options for the day. So how did I lose? Well, let's fast forward this now and move it on into the New York session, which starts at 1:30 GMT. And as you can see, we got quite a bit of choppy price action. Now at 12 o'clock, there was news release for the pound. Although it was good news, we had a jump up, but we had this big wick rejection, which seemed to reject the previous daily high and also this institutional price level. So price basically jumped up and it came all the way back down to close. So there was a lot of sellers sitting up here, and then it jumped back down to this Fibonacci level. We had another wick rejection. Prices just consolidating between these two levels. Now, as per my plan, I was looking for price to pull back to this fib level and then make some sort of pattern like this, where it's kind of testing the lows, gets momentum, breaks this little high, gets a pullback for an entry and takes off. That was my plan based on my morning analysis. Now, the market will do what the market will do. It doesn't obviously care about your plan or what you want it to do. And the trick is being able to respond to what the market is doing, not react, which I do feel like I did in this instance. It just didn't work out, but I'll show you what I did and see what you think. So instead of making this pretty little pattern here for a long entry, you can see that we got a little consolidation and then we got a large bearish candle down. We had a lot of momentum coming in. It broke this previous structure, it broke through the fib, and it closed below. And when I saw that happen in the New York session, I thought, okay, well, we aren't going to go up. We've got this huge wick rejection. We've already tested the daily high. It's been rejected. So the probabilities are that it's going to try to aim towards the next key daily level, which would be the previous daily low, which was down here. So my bias shifted from a long perspective to scalping a short perspective. And for the most part, I do still believe that was the right mindset, the right decision. If I was more conservative, I could have probably said, it hasn't done what I thought it would do, sit out and just watch and learn from it. But I didn't. Instead, I wanted to still capitalize on it. So I decided to look for a short entry. And this is where I believe I went wrong in the trade plan. It wasn't actually switching from long to short. It was in pinpointing my entry, because initially I was looking at structure. So from the top up here, where we had this big wick rejection, price came down, it came back up again. It didn't break this little high, but it broke this low here. We started to get a swing coming down. Now I made this little lower high here before it had the big sell-off. So this is the previous lower high, the previous structural level, which initially I thought was the place to run my fib from, to find those 3 optimum trade entry levels that I was talking about. So initially, my plan was that I would need price to come up here. I would have a larger stop just above that structure, and I would be aiming for a target at the bottom, aiming for that previous daily low. That was my first initial idea. However, as price pushed up here, I started to think that this was a very strong push down and I didn't want to miss out on the opportunity. I guess I got a little bit of FOMO, fear of missing out. So I decided to get an entry lower down. So I used the fib and I went from this tiny little area right here. We had a little green candle where price was consolidated before it dropped. And I felt like the momentum came from this area. So I would reapply my fib here to the lows and I would get in lower down. So I actually set my order at 1.2744 and I used a 15 pip stop. And my target was just a break of this low here. And this is what happened. So price pushed up, triggered my entry. At first I saw this really nice bearish pin bar rejecting these highs here. I thought that's good, that's a good sign. We started to get some bearish candles coming in, which was nice. And I thought that's great. Momentum is coming in, that's good. And at this point I kind of just walked away to let the trade work out. But in the end, we had some bullish momentum come back in and it went up to my stop. So I took a loss on this trade right here. Now in hindsight, what I should have done, and I don't believe I was wrong in switching short, although it was a more, not really risky, but just a more ballsy way to trade, I suppose. What I should have done was just trusted market structure. I should have gone from the strongest point in the market to base my entry on, not this little one here. If I had used that, then I would have been triggered in from this move here. And from there, although price does consolidate, it does come down. Now that was my initial trade plan and I changed my mind on that. If I had stuck with that, I would have got triggered in, I wouldn't have suffered drawdown, and although it would have been an uncomfortable hold overnight, during the early morning hours, it would have actually sold off down to my target. So I would have woken up in profit the next day. And I believe that the reason, I mean, sometimes, you know, trades do take time to play out, that's what happens, but I do believe the reason that this probably took so long is because it's against the overall daily bias. It's like the current is up. On the higher authority time frame, the daily time frame, it's an uptrend. So the momentum is generally going to go up, but it needs to pull back because that is the ebb and flow of the market. So when you scalp these pullbacks, they are riskier because you're going against the overall flow. The current isn't with you. And there are potentials to win, as you can see from this first idea, but it can take a bit longer. But of course, I didn't calculate that correctly. That was the trade that I should have taken, could have taken, if I had just sort of responded a little bit more mindfully, I guess, instead of just wanting to get in quick and not miss out. And that is one of the biggest causes of losers is emotions. Fear of missing out especially is a huge trigger for losing trades. So it's really good to go through this for me personally, because you know, I can see that my strategy does work. I've just got to really stay focused and centered and apply it and not give in to emotions when they arise. That's the trick with mindfully trading. But as it stands, I did take a loser. Now this was in my live account with FXView, the broker that I use. And it was also in my account that I am trading the high stakes challenge with the prop firm, the 5%ers. So if you don't know much about that, I did create a video last week which really goes in depth in the review of high stakes. It's a brilliant program. I believe it's one of the best out there actually for gaining an account with the prop firm, because there is unlimited time. There are loads of different account balances you can choose from, and the 5%ers are a great prop firm to work with because they offer a lot of support and a lot of mentorship and education. So if you want any more information about the 5%ers, I have got a link below in the description, and I'll include a link above to that video as well if you want to find out some more information about the high stakes challenge. But it was a small loss on high stakes. Fortunately, I was using a reduced size position. So instead of risking 1% in my account, I was risking 0.5%. So it wasn't as bad a loser as it could have been. But, you know, losers sting. They're never nice. And I think the trick is being able to just carry on, putting one foot forwards in front of the other after a loser and continuing on. But as I'm recording this trade was taken on a Thursday. Today is the Friday and it's the weekend, so I'm going to have some rest and just sleep this off over the weekend and come back to the markets refreshed next week, ready to go. So I hope that you've enjoyed this video, something a little bit different, reviewing a losing trade. Really good practice to do, really good to do for yourself, because it helps you to just highlight if there is something wrong with your strategy, if there's something wrong with your risk, with your analysis, if it's an emotional response, or if the market is just simply not in your favor that day. So for me, I've gone through all those points and I have got a lot more clarity moving forwards on how I can be a better trader. So I hope it's helped you guys out as well. If it has, please help me out in return by hitting that like button. Don't forget to subscribe to the channel and I'll catch you in my next video. Thanks for watching. Bye.